Welcome back to the news. We start today with a massive environmental showdown in Utah. Plans for the Stratos project, a hyperscale data center backed by Kevin O'Leary, are set to consume more than double the state's electricity and dramatically increase carbon emissions. We dive into how this colossal development threatens the fragile ecology of the Great Salt Lake and the high desert environment, and what the public backlash is really about. Explore the local efforts in Westbrook, Brunswick, and Sanford as communities try to preemptively set their own rules for this rapidly growing industry. Finally, we pivot to the financial side of this tech boom. Jefferies has highlighted Riot Platforms' aggressive push into AI and nuclear data center plans, sending their stock back into focus. We break down the valuation of Riot Platforms, looking at the potential upside and the significant risks tied to their power capacity and future earnings potential. Stay with us for the full story. Plans for a massive, celebrity-backed hyperscale data center in rural Utah have ignited intense public and political backlash, raising serious concerns over environmental impact, water scarcity, and climate change. Dubbed the Stratos project, the development, championed by Kevin O'Leary, is slated to span 40,000 acres and require 9 gigawatts of power once operational, potentially increasing the state's carbon emissions by 64%. The environmental projections are alarming. Physics professor Robert Davies estimates the facility could cover the area of Washington, D.C., making it the largest data center globally. Crucially, the project is projected to generate 16 gigawatts of thermal energy, which, when combined with operational power, could spike nighttime temperatures in the high desert valley by as much as 28 degrees Fahrenheit, potentially transforming the climate into something akin to the Sahara Desert. This development is situated near the northern tip of the shrinking Great Salt Lake, which is already experiencing record-low elevations due to a severe dry winter. Experts warn that the massive heat island effect could devastate local ecology, leading to increased evaporation, collapse of the dew point, and threatening the fertility of land and wildlife. The controversy escalated after Box Elder County commissioners approved the project, citing support from powerful state agencies while largely ignoring public concerns. Utah Governor Spencer Cox has since signaled a shift, acknowledging that questions regarding water, air quality, and land use are valid and demanding clear accountability. Opponents highlight Utah's existing efforts in water conservation and investments aimed at refilling the Great Salt Lake, noting the environmental contradiction of building such a water-intensive facility near an endangered ecosystem. Residents argue the project demonstrates a prioritization of corporate greed over community well-being. While developers downplayed the risks, citing assurances that air quality would not be destroyed, scientists are deeply concerned about the scale of the thermal discharge. The project plans to utilize a power source linked to the Ruby pipeline, suggesting a reliance on natural gas. The situation reflects a broader national trend where communities are increasingly clashing with tech giants over resource strain. Utah's Division of Water Rights has received minimal applications for water rights transfer, despite the scale of the proposed project fueling fears that the project is proceeding without adequate due diligence. Data center demand is surging, with projections suggesting it could more than triple by 2030, yet the path to meeting this growth is obstructed by complex permitting hurdles and political tensions. Historically, land acquisition, tax incentives, and power availability have been the primary obstacles to data center development. A 2026 report from Foley and Lardner highlighted a significant bottleneck, noting that nearly 48% of U.S. data center projects stall at the zoning and permitting stage, largely due to misalignment between developers, utilities, and government bodies. Growing infrastructure strain is intensifying regulatory scrutiny. As data centers expand, they are exceeding the capacity of many local and state systems. Key friction points involve state energy policies, local land use approvals, and stringent environmental review requirements. Public perception regarding data center energy consumption is reshaping state energy policies, with some politicians blaming these facilities for rising energy costs, despite data centers consuming only about 4% of total U.S. energy. In response, several states, including Maryland, Virginia, Georgia, New York, and Maine, are exploring data center moratoriums based on energy concerns. Oklahoma City recently enacted an emergency moratorium on new data center developments while studying local impacts, setting a precedent for infrastructure review. Despite moratorium discussions, states are implementing measures such as minimum load commitments, financial obligations for grid improvements, and bring-your-own-power policies. Georgia's Public Service Commission approved a rule in January 2025 allowing utility companies to charge data centers for electricity in ways designed to protect retail ratepayers. Similarly, the Public Utilities Commission of Ohio has permitted utility companies to impose enhanced financial obligations, requiring data center customers to pay 85% of the energy they subscribe to use. Local land use approvals present another major challenge. Data centers often fall into ambiguous zoning categories, industrial, technology, or mixed use, leading to delays due to differing municipal standards. Developers must navigate this complexity by engaging dedicated zoning professionals. Furthermore, environmental review is intensifying, extending permitting footprints beyond the physical site. Legislative efforts are emerging to address these concerns. Illinois has proposed the Power Act to establish comprehensive regulations for hyperscale data centers, and California has introduced SB 887, which could offer certification benefits for data centers meeting specific criteria related to water use and clean energy. While data centers consume a significant volume of water, around 17 billion gallons in the U.S. in 2023, this consumption pales in comparison to the water use of agriculture. Ultimately, regulatory and permitting issues are identified as the foremost risk for U.S. data center development. Proactive diligence must now include comprehensive assessments of state regulations, zoning, environmental constraints, and grid interconnection. The most effective strategy involves a proactive, coordinated legal approach, coupled with lobbying efforts to address shifting political and regulatory landscapes as the demand for cloud computing and artificial intelligence continues its rapid ascent. A patchwork of local regulations is emerging in Maine as towns and cities consider enacting their own moratoriums on large data center development, following Governor Janet Mills' veto of a statewide pause on permitting for facilities of 20 megawatts or more. This local response follows a recent statewide legislative setback, prompting community leaders to seek preemptive measures to review zoning rules and develop specific regulations for these rapidly expanding facilities. Several communities are actively discussing proposals. Sanford and Scarborough are moving forward with moratorium considerations, partly because developers have already proposed projects in those areas. In contrast, Brunswick and Westbrook are looking to get ahead of potential construction. The motivation behind these local pauses is to provide officials time to assess existing zoning codes, which many officials argue are outdated and not specifically tailored to the unique characteristics and impacts of modern data centers, particularly those driven by artificial intelligence demands. Proponents of data centers cite potential job creation and economic growth, while opponents raise concerns over resource consumption, including water, electricity, and environmental pollution. Maine Municipal Association Advocacy Manager Tanya Emery noted that while discussions are currently in nascent stages and largely speculative, the event has forced communities to prioritize their infrastructure concerns before development occurs. In Westbrook, Mayor David Morse cited internal discussions about how existing local codes apply to data center development, noting that the current definition of a data center was written before the current AI boom. The city is exploring implementing a 180-day moratorium, the maximum allowed by state law. Brunswick is considering a similar proposal, with its draft ordinance targeting facilities with gross floor areas of at least 10,000 square feet or electrical capacities of 20 MW, focusing specifically on the scale of the development. Scarborough officials view the moratorium as an opportunity to educate themselves and develop specific requirements concerning noise and light pollution, aiming to align future development with community visions. Sanford is also grappling with a proposal, which is partly fueled by public opposition to a large-scale data center project. The proposed ordinance is designed to address the lack of specific regulations for these facilities, aiming to develop data center-specific rules regarding resource usage and site design, while still supporting economic development within appropriate guardrails. Riot Platforms, Riot, stock is regaining investor focus following recent coverage from Jefferies, which highlighted the company's strategic pivot toward artificial intelligence, AI-focused data centers, and its collaboration with terrestrial energy on nuclear-powered facilities. This attention follows a period of strong performance, marked by a 30-day share price return of 29.71% and a one-year total shareholder return of 161.87%. Although the stock has recently experienced a 7.3% pullback amid reassessments of short-term risks. With increased scrutiny on its AI and nuclear data center plans, Riot Platforms now trades just slightly below the average analyst price target, prompting questions about whether a buying opportunity still exists or if the market has already priced in future growth. The company's aggressive strategy involves leveraging its extensive power capacity in high-demand regions to build a scalable data center business, positioning it to capitalize on the growing demand for AI and cloud computing infrastructure. Based on current analysis, a fair value for Riot Platforms is estimated at $25.84, utilizing a discount rate of 8.98%. This valuation is underpinned by assumptions related to rising power utilization, a potential reset in profit margins, and a specified future earnings multiple. Proponents of this valuation suggest that the company is currently undervalued. However, the narrative is contingent on several key factors. The success of the data center build-out depends on attracting tenants and ensuring power capacity is utilized effectively. Furthermore, the stock's valuation metrics warrant closer examination. Trading at a price-to-sales (PS) ratio of 13.6x places Riot significantly above the U.S. software industry average of 3.5x and the fair ratio of 4.9x, even when compared to the peer average of 20.8x. This disparity signals a potential valuation risk should market sentiment shift. Investors are advised to weigh these growth stories against potential risks, including volatility in Bitcoin prices and the operational challenges of new data centers. The analysis emphasizes that investors should critically assess whether the current premium paid for the AI and data center pivot is justified by the underlying fundamentals.